All right, everybody, what's going on? It's Modern Micro, and we're back with another video. Um, Not gonna be about Pokemon. It's not necessarily going to be about a stock or a specific stock or about something in terms of the indexes and what's going on with them, or anything micro or macro with geopolitics going on in the world. We're just gonna talk straight about an option strategy that I do every single month, for about it's been about a year and a half now. I think I've gotten to a point where I can not just explain it really well, but really um, have it be a prudent strategy and recommend it for other people to do. Um, so I think August price action is one of the cleanest price actions that I'm able to explain. Outside of July, I just didn't do a lot of notes on the July's NFP report or my recap there. I could make another video with that July price action. If you guys want that, let me know down in the comments. But we're gonna talk about August 2025, and we see here. Or to start off, it is a option selling strategy, right? It's an option selling strategy where you set price ranges and you set a level, right? Whether it's to the upside, whether it's to the downside, or whether it's in between, a level of which you want to really just manufacture the win, and where you see the win play out. And so we'll understand that a little bit more, but basically, call credit spread, put credit spread. Do you do both? It's an iron condor, and I'll explain that a little bit more later on. How to use them, when to use them, what time to use them, what do you look for, what confirmation do you get from using them, and yeah. So starting off, let's just set it straight. Nasdaq and the S&P 500 every Friday, or typically the first Friday of the month. It marks the NFP high and the NFP low, starting from 5 a.m. When the data comes out, 5 a.m. Eastern, or 5 a.m. PST, all the way until 1 p.m. PST. Um, the From the moment the data comes out to when the market closes that day, that is the high and low of the day. And so you'll map that out. The actual numbers don't necessarily matter of the NFP report, whether it's good, high, that unemployment data does not matter. You just want to mark the high and low of that day, which is typically, again, the first Friday of the month. It's a fundamental event, meaning that it has some sort of structure, it has some sort of price action that you work around, and as a result, you really just trade around that level. Um, and again, it is a high probability option strategy. Roughly 90% of the time, it marks the high or the low of the month within a 1% margin, right? So that doesn't mean, you can really get too aggressive with these. It is high probability, and within a 1% margin, you can have some room to play around with. But in terms of an option selling strategy, and what I see would net you around 10% a month, I think this is a bit the easiest way to go about it. You can buy options and trade to one of these levels if you see some sort of price movement that sets you up for that. But we can talk about that a little bit later. So nonetheless, high probability to mark that higher low within a 1% margin, and is a fundamental event. It generally it marks a level that you have to watch every single month. If you are a options trader, futures trader, options seller, whatever the case may be. The high for the QQQ is 560.70, the low is 551.70, SPY 628.20, and the low of 619.30. So I'm putting this right now out. These numbers, these levels aren't necessarily that well to read, in terms of these pictures that I have for you, but you can see here they are marked down and they are shown in the white. The box is when we are in the green zone, or in other words, it's a full day open and close, or a full time above a certain level. So again, I'm not too sure why I put this here because it wasn't a full day open and close. We had open within the box, got above, and then chopped around the NFP high. And so that's what I said here. This was Monday, um, immediately after NFP, the Friday NFP print. You don't want to do anything on that Friday. You want to wait until Monday, maybe Tuesday or Wednesday, depending on how price movement is and how it fluctuates. Um, but you want to wait until at least Monday, um, likely closer to Tuesday and Wednesday to get confirmation of whatever Monday gave you. So Monday we opened above NFP highs on QQQ and dip below NFP highs intraday on the 9 a.m. candle. You proceeded to chop and into the close. You didn't really get any confirmation whether you wanted to continue higher or drop back into the zone, and that's fine. On Monday, you don't necessarily want to enter a trade, especially if you're giving mixed signals like this. Um, Not only that, but for the NFP reading to work and to have that confidence that it won't fall below this NFP high, you likely want to see 2 or 3 full day open and closes above the NFP high or below the NFP low, whichever direction the market wants to go. This easily could have been flipped and hovered around this NFP low level, and we would have had a different story to the downside, or same story but just to the downside. So again, wait for 2 to 3 days, full day open and closes, and then you would enter trade. Whether it's chasing or not doesn't necessarily matter. You just need to just choose an entry point that works for you. Let's say we get a little bit overheated as we see here. Don't be scared to enter a trade just yet. Or for one, don't enter a trade just yet just because it is only just going to be one day open and close above. But make sure if you're getting your percentage, right, which I look for 10%, and you're getting some sort of, evening off of where you're likely wanting to have your contract expire worthless at the end of the month. If you get both of those, that's fine. Don't be scared to chase. If you get some downside pressure, you could average in or get more conservative strikes and still look for your 10% return. That's what I always look for, right? I look for, can I get my 10% return before the month ends, regardless of where I'm at, where the market is at, and if I'm able to get it below or at the NFP high. We'll see here in the future, and we'll expand on that a little bit more. August 6th, possible fake out into the chop zone and remain the course from what I mentioned before. Continue the day above previous day highs. So now, not only did we bounce off this level of the NFP high, but we also, made a push further. So that would be our first full day open and close above the NFP high. We're going to look for another one. We need to look for another one. This is why I didn't take a position just yet. August 7th, second day of a full open and close above NFP high, and waited to enter a position until the final hour of trading to confirm this. Now this is where I enter a trade, just because I was a bit skeptical on if we're really even going to get a strong retrace. I mean, we were about 2% above the NFP high, and so I was confident in just wanting to enter the trade and manage it later on. Not only that, but I got a really good entry. We see here second day with the full open and close above the NFP highs, and I opened a 540 530 put credit spread expiry 8/29 for 98 cents, otherwise 9.8%, return on equity in 22 days. So you see here on QQQ, I open a 540, 530 put credit spread. What does that mean? That means I'm not here. I'm not in big trouble if this falls to 560. I'm also not in big trouble if it falls to 550 either, right? If it wanted to pull back and chop around this 550 area, we would have to fall all the way below, and it's not even here in the screenshot. We would have to fall below another 2% or so to get to the 540, 530 where I'm at. The 30 strike is what I bought. The 530 strike is what I bought. The 540 is what I sold. Because I sold the higher strike, that means I'm getting a premium for doing that trade. Just because it is closer to where the market is at 570. So that little discrepancy when I'm selling premium, if this was flipped, it would have been a put debit spread, and I would likely want that would be a bearish retracement. So 540, 530, that's bullish because I am selling the premium for the higher upside strike, and buying the premium that is lower, which is a 530 strike. So that gave me 98 cents per contract. The contract is the underlying times 100 shares. So times 100, the 98 cents, that would be $98 per contract. And it cost me $1,000 to do that trade. So 9.8% return on equity. I forgot honestly how many contracts I did have in here. But nonetheless, we move on. So now we are in these 540, 530 put credit spreads. We see here now shifting a little bit to SPY. Sorry, I have a little raspy throat. August 8th to August 11th. Another day opening, holding, and closing above NFP highs. And I took the opportunity on the pullback from the end of the day to open a small position into SPY. 615, 605 put credit spreads, expiry 829 for 82 cents a contract ahead of the CPI report tomorrow. So again, because we've been holding for, what is this? 1, 2, 3, 4 days above. Typically we look for 2 or 3. Because already in short order, we've gotten 4 days of full day open and closes above the NFP range. I have full confidence that this 628.21 level is going to hold no matter what. No matter what. Well, no matter what in context of noise, right? There could be an upcoming fundamental event that is kind of like a black swan event, but nonetheless, we've seen the statistics back from here. 90%, roughly 90% to mark the high or low of the month, and to do that, you need confirmation of upside or downside movement, and we got that confirmation here. 2 to 3 full day open and closes above or below that level, and so we got that here. So from the 6th to the 12th, you had the weekend between the 8th to the 11th, and we have a full day. We have a good amount of full days open and closes, and so because I did that ahead of the CPI report, we had a little bit of implied volatility. I like that. You like higher implied volatility when you're selling premium, knowing that you can be further far from the strike, and as a result, regardless of what comes out, you likely wouldn't really make that catastrophic move that the implied volatility is saying. So I wasn't scared of the CPI report. Don't be scared about anything of that sort if you have a trade going, because you have the confirmation. So August 12th to the 13th, my put credit spreads are shrinking by the day. Open SPY 620, 610 Put credit spreads expiry 8/29, right? Still within the month, for 60 cents a contract on August 12th, and letting the market do its thing. Through all the smoke of a red August, of job market worries, of tariff scares, a possible hot CPI report, the market has told you it wants to go higher since August 6th. And that's what I just touched on, is the fact that not only are you just um, it is the noise trying to shake you a certain direction, but you don't necessarily need to follow, the market that intensely when you have the price action telling you what it is. When the price action is telling you, hey, we've respected this level throughout basically the entire month, we're not going to go below it, right? All you need is a 2 to 3 days of full day of confirmations. We got 4 earlier, just in the first week. So it's easy to chase. Now, that doesn't mean go stupid on your entries, but it is easier to chase when you see any sort of, small pullback. You just see it as a higher low. And we see that here. We see a bunch of higher lows, higher highs, and we just, ran up. But this is where I got a little too aggressive, right? This overnight or this weekend gap was never filled, right? It was only respected once, twice, but it was never filled. And so I learned here we got a little bit of red, right? I think this is August 19th now. We do have a little bit of red. I said here, healthy retracement going to last week's highs. We're still just 1 to 2% below all-time highs, and I see nothing to worry about unless we breach, the NFP highs. And that's what gave me the confidence to stay in my trades and then also add into it and average up, because like how I just said, we've been above the NFP highs for 16 days now, right? 16 calendar days. And I'm not expecting, this sea of red, whatever the narrative is, whatever, Trump is saying, or whatever Powell says, now going to be the new Fed chair. Whatever somebody says something, or there's a new tweet, or a big company reports, Nvidia reports, it doesn't matter, because we know that this NFP high is going to hold, just because we already got that confirmation early on. So I said here, if we get to that point, the NFP highs, and fail to bounce from those levels, expect a very quick and mean sell-off to the NFP lows. Otherwise, remain the course. I say this because it's a level by level structure, right? You lose this NFP high, you will immediately, in short order, within that same day or the next day, 24 to 48 hour timeline, you will drop from 560.70 to 550.70 in very short order on the NASDAQ. You will lose 2% very quick. And again, it's because it's a level by level system. You go one by one. And that goes for the backtrack data, right? Not just the monthly data, but if there's different months in between, you will have to respect that. And maybe it knives through, but you would have to respect the next level that comes through just because the other one was broken. So again, if you see this fall all the way back, expect it to pop or bounce, do maybe a higher high bounce, and then if it doesn't hold, it doesn't do a double bottom, or doesn't do a higher low, expect it to fall below and into this red range that I marked out, and then maybe do a little bit of chop, but ultimately still fall to this NFP low. That is your target downside, full target downside, full target short-term downside, and likely going to be the point of interest for buyers. So nonetheless, because we're still above this range and still holding healthy, and we did close this gap, I was confident that we would do another bounce. And so my trade today, QQQ 550, 545, put credit spreads expiry 829 for 30 cents credit or 7.4% return on capital in 10 days. So we see here on the QQQs that is still below the NFP lows, guys, right? So not only if we were to touch this NFP high, it would still be 2% from the NFP low. And that's when I would, start getting a little bit worried, right? So it's not to say that, we have to hold the NFP high and this cannot be touched. It can be touched. That's the whole point of this, process, is that you allow it to be touched knowing that it's going to have some sort of bounce to the upside after it is breached or after it is touched. And you would expect that to hold, anticipate that to hold. So we see here, August 20th, we finally touched it. It's a huge level on the QQQs. SPY still didn't touch it. And so that was going back to what I said earlier about the July price action, that really reminded me of, just a month before of what had happened. We've seen QQQ sell off pretty hard just because it is a little bit more volatile. It has a lot more tech in it. So just anticipate that to be a lot more volatile. And then you see SPY holding strongly above the NFP high. And so these are the two charts that we have here. And we'll look into the July price action. So we see here August 22nd. We've held above NFP highs on this SPY and slightly breached QQQ on 820, right? Normally, I would be a little bit worried because we breached the 860 or 560.70 spot on QQQ. I would be anticipating, right, what I just said, anticipating to go to 550.170 or the NFP low in short order. The only problem is that SPY, not only are we close to the end of the month, right, but SPY is also holding really strong. And so do I expect this to continue selling off and SPY to touch the NFP highs and QQQ touch the NFP lows? Not really, because then that would be a huge discrepancy there. And it would be something that, okay, SPY is telling me we're still bullish, while QQQ is telling me it wants to break down. Well, that doesn't necessarily make sense. If SPY was in the same level, they both would have a really high chance of, continuing to the downside. Again, in very short order. But because early on, those two things. One, the SPY was holding stronger. And then two, we were already told from the beginning of the month, from August 6th, that we wanted to stay with upside. And so I kept on holding onto my positions. Again, it is scary because, you're just 2% away from a full loss and having to roll. But again, we're close to the end of the month. A lot of those earlier trades that I did, the one on August 8th and then August 9th, they're below 550. They're at 540. They're at 540 strike, which is still, about a 3% or a 4% move downside. And then the most recent trades that I did at 550, they're still, about 2%. So you are close, but you would still need a dramatic fall from the dramatic fall. I mean, we're coming from 583 and 646 on SPY. That's about a 2% move on SPY and, about a 4% move on NASDAQ. Especially by the end of the month, I didn't think the pain would get all that much worse. And then we see here QQQ July NFP price action. So give me 1 second. This price action, not as telling at all. And what I mean by that is you do get the chop. As soon as July NFP data came out on July 3rd, we see a huge pop and drop on the 7th, and you had chop all over this range, even some breaches to the downside of 551.62 on July NFP. You had chop, you're in the chop zone, and then boom, 515 or July 15th, 7:15, you have a pop above, so an open above and a close at um, the NFP high. And so to anticipate this continuing higher, you want to see some sort of continuation and hold above this 557.19 level. Did we get that? No, we did not. On July 16th, the very next day, like I said earlier, 24 to 48 hours, as soon as this level is breached and lost, you will likely expect, you will almost 100% expect this NFP load to get tagged. That's just how it works. That's just how it works. It's a level by level basis, treated like a staircase, and that's exactly what happened intraday. Intraday, guys, on the Nasdaq, we lost it on the 16th in the morning of July 16th, and then immediately tagged the July NFP low. And what did we do? We V-shaped rallied all the way back up to the July NFP highs, guys. This tells us not only that we wanted to push higher, but we weren't gonna go lower, right? You had the market telling you, using these NFP levels back at this 553 level, you're like, oh, this was a really strong point of control that we held. And we knew because it bounced from here and we didn't want to go lower, we were going to immediately, again, same thing downside, same thing upside. We're going to immediately jump within 24 to 48 hours, short order, 557.19. That's it. Boom, just like that. And it happened intraday. Huge V shape. And from then on, we held this level on July 17th. We had a huge pop. And July 18th, again, held. That's our 2 days open and close. Boom, you could enter a trade here at 557, 550, and you will, or at 550, maybe a little bit lower. That would be, yeah, because this is 566. So if the level is 566, you could definitely go 4% below or below that range, and you would get to around 545, 540 maybe. And that would be all the way below here. So not only did we have this insane chop, this back test, and this breach here all the way to the NFP lows, we can be all the way up here, and you could sell premium for 10% on your equity, or close to 10% on your equity, below the NFP low. It's the easiest thing, because what's the worst case scenario? Well, we had that happen in July again, worst case scenario. And it's a similar thing that's happening in August, is you get the confirmation that you don't want to go lower, whether it's in the beginning of the month where you just create your 4 to 5 days above the NFP range, or you have some sort of chop back test into the NFP lows, but it didn't want to go lower, so we're going to go back up to the upside, and now it's holding. You have the worst case scenario happen. Oh, you back test all the way to the NFP high. You do that back test, and what happens? You hold it. Whether it touches it or not, you're holding that upside. And so that's all you really want. It's not the fact that you need this to moon to the upside. You need this to go up 5% to make any sort of money. No, it's a really neutral, delta neutral trade, and you're getting a lot of reward for selling premium, or otherwise your theta decay. And so you're holding this upside, and even if it falls 1% from that, and you want to retest it, that's fine, because from July 17th, July 18th, July 21st that we're going to hold that spot. And so touches it or not, it doesn't matter. You have the confidence. So you get a pullback, you're right on your trade, you have the confidence to average into it. And that's exactly what happened in July. You back test it, and then you just continue forward. We see on SPY, it's a lot cleaner. It's a lot cleaner, but nonetheless, you see here you have a little bit of chop, 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 chop. You close above the NFP low. You could anticipate, seeing more chop here. Otherwise, going back into the NFP high, or no, this was intraday. Sorry. So intraday, you sell off hard below the NFP low, but then you get back in, and how I said earlier about knowing when to get into a position, you should not have any sort of trade here unless you're selling premium within this range, which I personally don't like. I like a little bit more direction. I need confirmation of where the market wants to go, and in choppy markets it does hurt. It does suck because you can't really enter trade all that confident. But you see here, you had no confirmation whatsoever to the upside, right? Because you didn't have a full day open and close, or 2 to 3 full days open and closes, and you also had no full day open or closes to the downside. You had an intraday sell off into the eighth. You had intraday sell offs, and then you had this right here. But so that doesn't count. This is X off. August 8th, or July 8th to the we have a full day open and close, but that's just one. And then the very next day, you see here July 9th, we pop above, breach it, break down again, and then you hold that level. So you had a lot of chop. You should not be in the trade. You should straight up just not be in trade for the upside or the downside. This momentum will, or the lack thereof, will kill you. You can trade around it. You can say, okay, I want to sell premium here, up here, and I want to sell premium down here. You could have, maybe some sort of like 600 put credit spreads and then some 640 call credit spreads. You could do that. You could 100% do that if you see a lot of chop. But make sure that once you get confirmation, you will manage that trade. That just takes a little bit more managing. I don't like to do that. I just like confirmation, and I like the market telling me what to do rather than reacting to the market. So you have chop, chop, chop all the way up until the 17th, where we get some sort of breach to the upside. That's not a full day open or close, so we wait until the 18th to have some sort of confirmation. Boom, 18th, boom, 21st, boom, 22nd. Or the 18th to the 19th. I think you have a weekend, so then you get to the 21st, 22nd. That's your confidence. And so even if we're right here at this NFP level, right at the NFP high, that's going to hold because you just had your 2 to 3 days of full day opener closes. So 2 really clean price actions, holding really well. And those are the 2 levels. I could break this down a little bit more for July, but we see here, you just see a lot of chop, no confirmation, 1 day only holding above, get back in there, and then you have your move, and that's what you really want to look for. You don't want to time the move. If you enter down here, you can get cooked really easily. You need to see what the market says. So then that's why I mentioned, at 553 to 555, that the market didn't want to go lower, so we're going to go higher. So that is that. August 22nd to August 31st, we pushed higher as predicted that same day, as SPY never broke down from its NFP Friday high, and QQQ did a retest and bounced into a full day open and close above its NFP high. Continuation went into the September. So then to go back to August 22nd, because I didn't necessarily time that all the best. I didn't really follow it that closely in terms of back testing and reporting. But we see here that we had some sort of breach. We had a breach here at 560. But that was documented already. We had a breach, but close. So going into that day, I think this would be August 23rd. We need this to hold no matter what. No matter what. If this doesn't hold, expect 550. If August 23rd, that was the most pivotal day in the entire market. If that didn't hold, expect 551, likely that same day since we're at close to the end of the month. If August 23rd did not hold above this NFP range of 560, this likely would have been a very different chart, very different breakdown. But because we had that confidence of early on from August 6th that was not going to happen, we remained the course. And so as a result, we just held through the entire time. We see here that 560 did get touched near the end of the month, or at the end of the month, the very end of the month. But that wasn't in August. That was September 1st. And nonetheless, my contracts had expired on the 29th. And so that's another reason why I emphasize having it the same month, right? Because, yeah, maybe we weren't at the 560 level, but let's say you did. Let's say you wanted to be a little bit more aggressive and you put a little bit more time on those contracts, you would have been in big trouble. Right here. What was the first slide? High probability to mark the high or low of the month, not of the future month, right? So it can change just like that. It can change just like that. The first day of the month, we could go below. And we could have a new NFP range, and it could be below this one, and it's all thrown out the window. What we want to look for is just the same month trading, and have a Friday expiry that has liquidity so you can roll in or roll out of. So we see here on August 29th, we held very strongly. And this is the box that we have to represent that. We held very strongly, and we closed above just under 571. So at 570, we closed at 570. Our trades, if you remember from before, we're at 550. What, 550, 540, and at 620 for SPY, which we closed at 637. So we had so much wiggle room, and we could have been a little bit more aggressive, but we still got a good return. I mean, we see here, we got 7.4% return on capital in 10 days. That's almost a 21% return, monthly return on my trades from August 19th. We see here on August 11th, SPY 615 put credit spreads for 82 cents a contract. Otherwise, 8.2% in what? That was around like 18 days. 18 days. 8% in 18 days. You don't see those things. You don't see those things ever. You know, unless you're buying options, or you're trading the index, you're day trading. You don't see that. You don't see that. And then we see here on August 7th, 540, 530 put credit spreads. Guys, where did we end the month? After all that chop, after touching the NFP highs, after, you know, being scared of whatever was going on geopolitically, that was nowhere near where we closed. We closed at 570. And if we want to go into September, we're still at 560. Our trades are at 540. Still, what? That's around a 4% move to the downside after coming from 580, because we got the confirmation so early. Like, that's what I mean. You can chase and you can still be right. You can chase, have your mark at NFP 550.70, and you're still fine. You know, if I wanted to write at this level, 583.32, and I was like, okay, this market is really bullish, I want to make some money off of it. If we get continuation, I just know it's gonna hold. I could have written this 550, 70, 550, 540 uh, put credit spread, saying that the NFP low is not going to be breached, and that would be 5, 10, 15, 20. That would that wouldn't be a that would be still just around a 5% move to the downside, which is what is going to net you that 10% return. At the time, that was very early on. That was around August, 13th. That was August 13th. So we knew just early on that these levels were gonna hold, and you could have chased here at this 583 mark at the highs. You could have chased at the highs, gone 5% back, which is what I normally do. Go 5% back, get your 10% return on equity, and just watch those contracts expire worthless. So, anyways, that was the breakdown of the August NFP data and how you can go about trading it. There's a lot of rules that come into it. Like I said, you want to wait 2 to 3 days until you really enter a trade, whether it's to the upside or to the downside. You want to see the NFP low hold, if it's to the downside, or you want to see the NFP high hold, which is to the downside. And that's when you enter. That's when you enter, and you get the confirmation that, hey, we're gonna, even if we don't moon to the upside, or we don't moon to the down, or tank to the downside, I know that this level is going to be respected, and it's going to be for the entire month. And so as a result, if you know that, you want to sell premium around it. That's that simple. So 2 to 3 days um, to enter a trade, and you want to have them be full day open and closes. You cannot pop open in the morning and then close below and take that as one day of confirmation, or to the downside where you touch the below the NFP low, but then you close above the NFP low that same day. You do not want to respect that. That is a non-factor day. That doesn't mean anything. That's just more chop. So don't trade around the ranges all that much. Do not whatsoever trade around the ranges. You want to know for certain that, hey, if this NFP low is holding, I want this to be respected, and I want the market to tell me that we are going to respect it, back test it, and either go to the upside or to the downside because of it. So be cautious. There's no rush in these trades, but nonetheless, you can get some really nice returns with these NFP levels. And if they're big ranges, like if they're 2 to 3 or 4% apart from each other, you could even buy premium and buy some calls or buy some puts, knowing that these highs or lows are going to be touched, whether depending on the price action, right? We see here during July, 557, you've seen this fail, and you could have bought puts to the downside of 550 and get more continuation there, right? You could have done something like that, and made a much bigger return. I just want to sell premium here. I want to make that clean 10% a month, and really just stack on equity and cash from there. So nonetheless, that is how you get a 10% return on your equity in a month. You don't enter the trade necessarily in the beginning of the month, but you will still end up getting that near 10% return by the end of the month. Whether it's you enter in the middle of the month, in the beginning of the month, as we've seen here in August, or at the end of the month, as we've seen in, or near the end of the month, as we've seen in July. So that's my strategy. If you have any questions, any concerns, I will be more than happy to respond to you guys in the comments, or create any concerns. I'm 100% willing to, explain this a little bit further. If you guys want another video of breaking down another month that I did a recap on and back tested it, let me know. If you guys enjoy this type of content, if you guys want more of, this options trading idea, and not just idea, but then also this strategy that not necessarily a lot of people use. People do a lot of cover calls, people do a lot of put credit spreads, but they don't utilize the put credit spreads or the call credit spreads in this manner, and especially not with the NFP levels, as it's not really something that's all that well known. So, anyways, let me know in the comments any questions, comments, concerns. I will respond in a prudent manner. And yeah. So other than that, it's been Modern Micro. Love you guys. Hope you guys enjoyed and have a great rest of your day.